I found a really cool pattern in the charts that could give us an idea or maybe even a guide on where this market could go as we're heading into Q4. And I wanted to share it with you guys so I could get your opinion on what you thought of it. So please watch the video and then let me know what you think down in the comment section below. All right, guys, this is what I want to show you here. This is the Fibonacci retracement starting at the previous high of about 124.6 to the previous low at about 107.3. Okay, and as you can see throughout this chart, there's been many a times we've had over the last month, we've had support and resistance throughout here, leading up to this new all-time high where it wicked above it real quick, but ultimately it got rejected by this line and came back down and found support right about here. So I do want to focus on these next two, the 1.6 and the 2.6, okay? So if we go back down and we go to the 5-day and right on over to the beginning of October, okay, you can see we were at about 114,000 at the beginning of October, okay? Now, if we look at the historical data of Bitcoin during October and November, historically we've had an average in October of about 20%, a little bit above. In November, it's 46, but in 2013, this sways the numbers way too much. So for November, I'm just going to take the median. So that's eliminated. So we have about 20% in October, move upward, and a 10% in November. Okay. So remember, we started October at $114,000. Well, a 20% increase from $114,000 is just a hair above 136,000, which just puts us a little bit above this 1.6 line right here. And even crazier, a 10% increase in November would put us a little bit above $150,000, which is just a hair below the 2.6 line right here. And because of this pattern, like I said earlier, that I found, it's something that I'm going to keep an eye on, because if this Fibonacci retracement can continuously hold proof and show support and resistance, it might be something I use as a sign to either buy or sell depending on what happens going forward. Um, but now, obviously, I talked about in my last video, a concern of mine, which is why I believe we ultimately got this rejection right here, is the liquidation levels. Because during the last video, we had about 2 billion in shorts and about 20 billion in longs. So I said, hey, there's a good chance we end up getting rejected down and finding a bottom somewhere else. Right now, we did get rejected and we found a bottom right at this 0.786 line. And I'm saying, is that it, could it go any lower? Absolutely. But right now it's swayed things a little bit more. So now to the upside we have 7 billion, and to the downside we still have 19. And there's a good chance we could, the market makers, what they've done over this past year is consistently shown anytime there's a lopsided amount of leverage, whether that's to the upside or the downside, there's a liquidity hunt and they come down and get it. So where could we go if we reference this Fibonacci retracement? Well, my idea is maybe we go right back down to this $114,000 and find support around the 0.382 level. And where would that put us? $114,000. That would liquidate about 11.5 billion worth of longs. Will that happen? I don't know. But it definitely could happen, and it's what's happened over the past year, and it wouldn't surprise me if it continued to happen. Now, I've said it before and I'll say it again. I believe macro events is really what dictates what way this market goes. I think the technical analysts, there can be and there could be patterns you find that are important, like I've just presented here. But ultimately, the market will move based on the macro events, in my own opinion. And one of those things happening is Jerome Powell is going to speak tomorrow at 8:30 Eastern Time. Now, what he says or any hints or clues he gives about what the Fed feels about the market could really sway the market to either dump down even more or go up even higher. So it'll be something to watch, keep an eye out for, and just see what he says in that meeting. And obviously, the other really important thing that's happening, like I mentioned in the last video, is the government shutdown. because for the time being, economic data is not being released. So it kind of gives us a harder time to understand, hey, what's the Fed going to do at their next meeting if we don't have the economic data? Um, what we do have, like I mentioned in the last video, is ADP came out with the jobs data where economists had expected a gain of around 45,000 jobs, and ADP actually showed a net loss of 32. And with the Fed cutting at the last meeting due to the weakening of the labor market, seeing signs like this shows me that it might continue to weaken. And as they said, they don't expect inflation to continue rising at a very fast pace. If the labor market continues to weaken, then we could continue to see rate cuts. And I think even right now for October, it's almost like a 95% chance, which is good. But if it weakens even more, we could see even more rate cuts going forward. And a few more events that are happening are these crypto ETFs that are coming through. There's 16 ETFs that are set to pass by month's end, and we've already had a Grayscale. The SEC approved the Grayscale's digital large cap fund, which obviously had Bitcoin, Ethereum, XRP, Solana, and Cardano. Now, these 16 ETFs coming in this month, they're predominantly altcoins. Obviously, Bitcoin and Ethereum, they already have ETFs approved. Um, but what I think is really important for the likes of Solana, XRP, and Cardano here, because that basket was already approved, the chances of their ETFs being approved throughout this month are just, they're almost a shoo-in. I don't want to say anything's guaranteed by any chance, but it would be hard for me to believe that if that basket was approved, that these singular ETFs would not be approved. And if these ETFs are approved, I think that could be a catalyst to start seeing things start outpacing Bitcoin in reference to altcoins. And maybe we could start to see some sort of altcoin season. Nothing's guaranteed. Obviously, this is not financial advice, and please read the disclaimer down below. But this is my thought process on the whole on these ETFs being approved. And, we hope that it happens. In addition to that, you know, we hope to see that the Clarity Act can pass, but that also depends on if the government can open back up. If it continues to stay shut down throughout October, that could push this deadline off for this to get approved. But if we can get it back open within a reasonable amount of time, there's a good chance that the Clarity Act could be approved through the Senate. Hopefully by the end of October, maybe right when these ETFs finally all start getting approved, which would just be a fuel to the fire for altcoins, because this would basically provide clarity for institutions which have been running leading this bull run for Bitcoin so far, and in consumers, because there were some problems before, obviously, with fraud, manipulation, rug pulls, and even insider trading. So getting this approved can give a lot of confidence going forward with institutions, with consumers, which could just lead to more inflow and cash flow into these altcoins and Bitcoins and just overall pump the market. So let me know what you think. Do you think the ETFs will get approved in October? Do you think the Clarity Act will pass the Senate in October? Do you think that the Fibonacci extension pattern that I presented here is something that'll even hold up to be true or not? Or do you think the market might just come crashing down on us like it has over and over again? I'm really interested in your opinions on the topic, so please leave them down in the comments section below, and I'll see you in the next one.